Good evening, everyone. We've been away for some time, but I think then we are back, and today we want to touch on rent income and how it's related with taxation in Kenya. So today we are going to speak about tax, but in relation to rental income. So it's tax time in short. So rental income tax in Kenya. So we'll proceed to the first chapter, just a small definition of what rent is. So rent means payment received from a right granted to another person for use or occupation of immovable property, which includes premium or similar consideration received for the use or occupation of that property. Then we'll go to rental income taxation under the annual regime. There's been a number of changes under this tax head. So when you talk about annual regime, then we'll be able to understand how we used to file it before the current regime. So rent normally used to be charged on actual amount received. So for example, you've granted a use of a rent and then people pay their rental on a monthly basis. So we'll collect that and we'll call it the rental income, what you receive for the use, of that property. So then all expenses incurred to generate rent, meaning any expense that was incurred as a result to receive that income, is to be allowed. And this is under Section 15 of the Income Tax Act. They are called allowable deductions. Tax is calculated under individual graduated scale. For example, if the nature of the company is either sole proprietorship or partnership, then it will apply under the graduated scale. And if it is registered as a limited company or a corporate entity, then it will have to go through the long process, and then this will be charged as 30%. So in addition, rent on non-residential buildings, what we call the commercial, it is taxable under the VAT Act. And then we've talked about the VAT Act, then you should be able to understand that if one person collects more than 5 million in terms of rent for that financial year, then the VAT Act also apply. And this is within the laws of Kenya. Remember, this is the VAT Act is very clear on what is to be included and to be taxed, under the VAT Act. So we will be able also to cover the VAT Act so that we're able to understand in depth when we, mention the word VAT. So then how to compute the taxable income. So this is just under the annual regime. This is how, the income tax used to be computed. So for example, you have two property. Property A, there are 5 units. Each unit generate 20,000. We'll multiply it with 12 months. So we have 1.2, it is 1,200,000. And then property B, which has 10 units, and each unit costs 15,000. For the next 12 months, if you assume that, all people will be there and then we'll be able to collect 15,000 per month, then it will come to 1,800,000. Then the total rental income for the two property is 3 million. So under this case, this person will be exempted from VAT because VAT only applies to those people who are able to collect 5 million and above in a year. Then if you are to collect 5 million and above, then remember also, you're also supposed to be registered under the VAT Act, which is a different also head of tax, apart from the income tax head. So, but because it is less than 3 million, so in this case, we'll be able to assume. This is just to explain further on what we meant, with this portion here. So then, all the expenses that you incurred, towards the generation of this 3 million will be allowable expenses. So you'll be allowed to less all these expenses from the 3 million. So if you had land, the rates, 10,000, you'll be able to subtract it from 3 million. If there's any insurance toward the properties, we less it. If you have agent fees could be the people who collect for you the rents. It could be agents in terms of, even the bank, they could be able to collect and charge for you. So that is what we call the agent fee, the people who are acting on your behalf. So if you have repairs that you've done also within that financial year, you'll be able to subtract it from 3 million. If you have loan interest, you'll also be allowed to subtract it. If you have a loan that you took towards, the approval on this building, then you will be allowed to less it. Then if you also electricity charges, if you use any electricity, it could be for repairs and maintenance, whatever it is, you'll be allowed also to less it. So then that the next taxable rental income will be this. So this is what will be charged at 30%. So that is under the annual regime. And if you're able to take that route on a yearly basis, then expect this. And then monthly rental income tax. Apart from the annual regime, this is now what is in current for summer action. So the act was changed, and you'll be able to see that one. That monthly rental income tax, what we call them MRI in short, this is charged under Section 6A of the Income Tax Act. It was introduced by Finance Act, 2015. And then this one was effective from 1st January 2016. So it's been enforced since this time. So then what happens? What is residential rental income under that regime? So remember that this tax is payable by resident person. When we talk about individual or company, we'll be able to explain this nature of relationship towards the taxation on rental income and for the use or occupation of a residential property where the rent income is between 288,000. This is annually. Per month, you just divide 288 by 12. Then we talk about 24,000 per month. And then up to a maximum of 15 million per annum. So then you'll be able to understand that if you fall between this bracket, then you're supposed to be between the monthly rental income, the MRI. Remember, if you fall below, meaning less than 288,000 and more than 15 million, then the annual regime is what you'll qualify for. So you'll either be able to fall under the annual regime, and the annual regime is what we've just explained. This is what we talk when we talk about annual regime. So if you you're able to collect less than 288,000 and more than 15 million, then you're supposed to fall in this bracket. So only people who earn between this and this then are supposed to apply for the monthly rental income. Note, landlords with rental income below cash 288,000 or above 15 million per year shall be required to file annual income tax return. And when we talk about annual income tax return, then it brings us back to this. This is what you'll be required to fill. If you get less than 288,000 and more than 15 million, then the annual regime will apply in your scenario. So please note this. So we'll go ahead and explain when we talk about what is the tax rate for the monthly rental income tax. For people who will qualify for MRI, then residential rental income is charged at a flat rate of 10% on gross rent received per month. So if you receive 24,000, because the minimum is 24,000 per month, which translates to 288,000 per year. So remember, if you are able to get 24,000 and less than 15 million in a year, then remember you are supposed to be charged a flat rate of 10% per month. Okay. So then it is payable when landlord receive rent from their tenants either monthly, quarterly, semi-annually, or annually. However, return must be filed on a monthly basis. So meaning by month, you able to file this rental income on a month, but you can either decide to pay it on a monthly quarterly, semi-annually, or annually. So no expenses, losses, or capital allowances shall be allowed for deduction from the gross rent. Unlike if you fall under the annual regime, which is this one, you will not be allowed to remove anything from what you've collected within that month. So note that one. If you get less than 288 and more than 15 million, then remember you will be allowed to less all the allowable expenses. Any expenses that you've used toward the generation of income, you will be able to less. But in this scenario, if you get your 24,000, we'll charge 10% of 24,000, then you pay it like that. If you incurred some other repair and maintenance, you won't be able to less it from this. This is the rule. So the tax rate is 10%, but also remember, no expenses, losses, or capital deduction allowances shall be allowed for deduction from the gross rent. How do one file for the residential rental income? So remember, the rental income is filed on or before 20th of the following month. So just like when we talked the other time about the TOT, the turnover tax, remember, same apply. Their deadline is the same. So this tax also, it needs to be paid on or before 20th of the following month. For example, rent received in March is declared and paid on or before 20th of April. This procedure is supposed to recur on a monthly basis. Where 20th falls either on a holiday or on a weekend, then you pay on a date before the weekend or before the holiday. So complete a monthly tax return online. We'll be able to do this one practically via iTax by declaring the gross rent, and then tax payable will be computed automatically at a rate of 10%. It's a very simple procedure that I'll take you through, and you'll be able to see how one could be able to file this one on his or at his comfort. So for any month that the landlord does not receive any rent, he or she shall file a nil return. Remember, with KRA, you have to file either nil if you didn't receive any income, and this applies to TOT and other taxes. As long as you have the obligation, if you don't receive anything, you simply go and declare I didn't receive anything by filing a nil return. So residential rental income is a final tax. Therefore, persons who are not required to declare the same in their annual income tax return. So once you file this monthly one, then you are not expected to file again at the end of the year. At the end of the year, you can just simply file 0 on your return to simply show that I've been filing on a monthly basis. So it's a final tax. You don't have to declare anything at the end of the year. TOT, remember, also was a final tax. Once you file on a monthly basis, then you don't have to declare anything at the end of the year. You can now also file and pay your monthly rental income tax using the new KRA M-Service app. So if you have this app, then you could be also able to file here and make payments. So what is the penalty for late filing and late payment of MRI? So date, returns are filed and tax payable on or before the 20th of the following month. We've just mentioned this in our earlier session. So penalty on late filing. Remember, late filing of MRI returns attract a penalty of 2,000 or 5% of the tax due. So whichever is higher for individuals is what you need to pay. So you do a comparison of 2,000 and 5% of the tax due. For example, you say the tax due is 30%. So if you talk about 30% of 5,000, then we can simply say that 30,000, you'll be able to compute it, and you'll be able to compare it with 5,000 and see that which one is higher. So if you talk 5%, it is 1,500. So if it is 1,500 against 2,000, then you'll be able to pay 2,000. 20,000 or 5% of the tax due, whichever is higher for corporates. So when you talk about corporates here, these are for limited companies, either public, private, whatever nature of that company it is. But for corporates, the penalty is 20,000 or 5%, whichever is higher is what you pay. That one is penalty on late filing. We also have penalty on late payment. What happens when you do the late payment? So we have the 5% of the tax due. And if you don't pay it, the 5% of the tax due, then remember, on a monthly basis, there will be an accumulative of 5% per month on every month until such a time that the tax is paid in full. So let payment interest of 1% per month on the unpaid tax until the tax is paid in full. So this one will be more of an incremental tax. So every month we do 1% of that amount, add to the 5%. Another month, total of that plus 1% added to that. So it will be accumulative in nature. So who are exempted? Exemptions. Who are or may be exempted from monthly rental incomes. So the simplified tax does not apply to, for example, non-resident are exempted from this kind of tax. Landlords earning more than 15 million per annum or less than 288,000 are exempted from monthly rental income. Taxpayers who wish to remain in current tax regime on rental income may elect to do so by writing to commissioner. So if you don't want to be put under this bracket, and for example, you already have an earning of 288,000 and 15 million. So if you write to commissioner and then by the power bestowed, by the commissioner, they are able to allow one not to, apply under the monthly rentals income. But if you get more or less, then remember, you don't have to, belong to this tax. But if you earn 288,000 and 15 million in between that bracket, then automatically you qualify to be added in monthly rental income tax, which is 24,000 per month and 250,000 per month in between. That is on a monthly basis. Then you are supposed to qualify to be under the monthly rental income tax. So that is all about rental income tax. So there's those two regimes. So note where you belong and apply it effectively. Otherwise, thank you for today. Thank you for today's class. And we'll be able to proceed with our tax classes more rigorously by doing also the practical examples on how to file online. We'll be able to access our iTax system and be able to show you a very detailed process one by one on how to file the monthly rental income tax. Otherwise, thank you. Bye-bye. Have a nice day.